as we draw here the end of the month, July's actually been pretty kind to U.S. equity investors. Let's talk about the markets this week and the month in general.
All right. Well, July was the sixth month in a row we've seen gains in the S&P 500, which is a fairly unusual result, up a little over 2% for the month. The NASDAQ up a little under 2%, as was the Dow. Small caps, which underperformed for the beginning half of the month, actually have reasserted themselves in the last couple of weeks. And it's due to any number of factors, but I think the most important factor is that interest rates continue to be extremely low. The 10-year yield is at 1.23%, well below the rate of inflation. Negative real interest rates make risk assets attractive.
So the S&P has rallied at least 5% in each of the last 5 quarters. That's crazy for a long time, right?
Right. Yeah, since before you were born.
Thank you.
You're very welcome.
Way before I was born, I think. But yet we're still seeing, one of the factors we look at is that greed and fear factor, and we're still seeing some fear in the market.
Yeah, it's an interesting dilemma because while the S&P 500 has done quite well in July and really throughout the year, the breadth of the market recently has been lackluster. So an equally weighted S&P index has lagged recently. The fear and greed index stands at 26, 0 being the lowest, 100 being the highest. It rarely gets to those numbers, but at the peak of the pandemic, we got to 2. But anytime I see the fear and greed index under 30, I'm more inclined to be a buyer than a seller. But the fact that the S&P 500 is making new highs while that indicator remains so low tells me a lot of people that own small cap stocks are kind of suffering, and you wonder what's going to cause them to potentially give up the ghost. Perhaps it would be a correction in the larger cap stocks, which would filter down and demolish some of those stocks.
Might. Usually don't people pick up on those small cap stocks if they're expecting an expanding economy?
Well, and typically small cap stocks do better when the yield curve is steepening, and we're not seeing that, right? We're seeing fears of a slowdown in the second half. The Atlanta Fed at one point had second quarter GDP growing at 10%. It came in at 6.5% versus an economic estimate of about 8.3%. So weaker than expected. And that's partly due to the supply bottlenecks, but it's also due to some difficulty hiring people. So that economy has potential to do better going forward as inventories get rebuilt, but certainly a disappointing result from Q2 GDP.
Yeah, but it certainly hasn't hurt consumer spending.
No, consumer spending held it up, 11.8% annualized, consumer 70% of GDP. So that's all a good thing. But again, consumers have been buttressed by handouts from the government in some cases, PPP programs, lots of pent-up demand and the like. So they have a lot of savings they weren't able to spend last year on going on vacations and the rest. So you'd expect consumer spending to be strong now. The question is what will happen in the second half, and that's why earnings season is so critical.
Earnings season. And, of course, expectations, I think, are fairly low, maybe not subterranean, but pretty low. What's the market reaction and what are we currently seeing?
Well, it's been a fantastic earnings season so far. The beat rates are well above average. The guidance has been above average. What was thought to be 65% earnings growth at the beginning of July, at the end of July is now closer to 80%. Whisper numbers are even north of that. So earnings season so far has been really good. And the good news there is it increases the E, which essentially reduces the PE multiple investors have to pay for earnings, and relative fixed income, that still looks attractive in our view.
Oh, so it does. So people that have money to add right now, it's not necessarily the worst thing.
During this time of year, I recommend doing more of a dollar cost averaging approach, particularly if you've missed the rally. We have had a lot of IPOs recently. That's a sign of exuberance. We saw Robinhood come public.
Sure.
When you think about a top or something that could mark a near-term top, it's the public trading of a company like that, right, who appeals to retail investors, traded down after the initial print. So that tells you something about the valuation.